Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from YouTube. We're going to feature today an asset that is a virtual asset, which is the Grayscale digital fund. And I found it interesting enough over the holiday weekend that I thought I would share this with you. And I personally invested in this fund, and it appears that it's a very interesting digital asset. Now, one of the things here I want to discuss early in this segment is the tremendous amount of interest that we've had in the digital community, particularly in digital currencies, are just exploding. And I think if you are interested in getting involved but don't know how, I think a fund of this nature certainly can take away a lot of the questions that you might have as an investor that obviously are the same questions that I have when I look at something. So what I want to do here is do the process basically that I go through in identifying an asset. And in this case, for example, we've identified GDLC, which is this Grayscale digital large cap fund. And it's a diversified fund that has about $30 billion under management. And it's basically allows investors to more effectively implement strategic and tactical asset allocations that incorporate digital assets by using the fund shares. The fund seeks to hold large cap digital assets that collectively comprise 70% of the entire digital asset market, supported by a network of trustee service providers. It's acquiring a tremendous amount of interest, and so it certainly got my interest, and has raised just an incredible amount of money over the last few years. Let me just share some of the details that I go through basically myself here, and show you the process that I go through basically in identifying once again an asset that I am looking to participate or I'm looking to invest. Let me bring this page here and I can share with you the details. Basically, trading lasted about 2670 on the quote, but the real quote is about 2582. This is delayed Yahoo updates, but the fund is a pretty impressive fund, and it's doing all the right things. It's got 352.9 million under management. The performance is 301%, over 301%, trailing 12 months. Since the inception, it's 122.8%. It is a pricey fund because it's got the volatility and it's managed by some highly professionals, experts in the field. So this takes away the risk or the uncertainty of how do you do it? How do you get involved with something like that? If you're a self-directed individual. So, paying a 2.5% fee when you're making 122% a year is, I think, fairly reasonable. But again, this is a highly volatile digital asset fund, and you got to be prepared basically to withstand that kind of volatility. It's an aggressive um, performance, aggressive volatility fund, and trading in virtual currencies essentially is a different level of volatility that we need to address. So once we identify the asset, then obviously we look into the data, and I begin to do my calculations. I begin to look at the daily chart first and see, pretty much what it's doing. We can see that we've made a high here recently of 54. If I open it up a little bit into the weekly, I see that the low was made on April 13 at 512. From April 13, about a year, it went from 512 to 54. So let's do the math. 5 to 50, right? That's a 10 to 1 return. That's 1,000% return in the last 12 months. From that high of 54 now, we have seen it correct back down to the low that was made on June 21st. It went from 54 back down to 18. And now we are looking at a reversal. So if I want to calculate, let's say, I want to see the Fibonacci retracements from the inception, the low that was made back in April, let's say, to the recent high here. We have an idea pretty good where the market corrected into, and we can see that it came down to a perfect 61.8% golden ratio Fibonacci retracement. This is exactly where the market should, based upon the Fibonacci retracement methodology, revert from these levels. If it were to close below 78.60%, that would mean that it would break the previous pattern. It would negate the previous pattern. And in this case, it would negate this explosive bullish pattern that was established back at the end of last year. So one of the reasons why I wanted to focus on this is because I realized that we've come down into a completion pattern in a level that indicates a high probability that this instrument should be bought. And so you can see, if we move into a closer time frame, the daily, the market is trading above the golden ratio average. I wanted to take a look at a little more deeper form of analysis on this, and I want to include, let's say, the Fibonacci fan lines. Then I would take the low that was made recently to the recent high since April. And so what this shows is the volatility of the instrument, that from a high that was made at 54 on April 16, 2021, we've seen a correction, a Fibonacci correction back down to the lows that we made of 18. Tremendous volatility coming down into a 61.8% area where it reverted from. And now we're looking at activating the reversion. You can see here the Fibonacci trend line resistance obviously is holding this move, this breakout for the time being, building a pattern. So it will trade here until the momentum again for the buying demand will overtake, you might say, the bearish supplies that are being traded at these levels. So we are in the first fan, what it's called the first fan, the first trend line, Fibonacci trend line resistance level. Well, once we close above this trend line, then obviously we can revert back up to the 50% Fibonacci retracement, which is in that 2978 level. So the instrument is reverting back up again, and if we go back up just to halfway of the whole correction up, revert back up to that, let's say 38% retracement, you're looking at about 35.48. So this is a very highly volatile instrument, and I think with the kind of, you might say, interest that's developing in, again, virtual assets, I believe this is a really great asset to buy and to hold and be patient. And I think that it would prove itself here over the next few years. I wanted to show you and share this information because these are assets I believe that one needs to add to your portfolio. It doesn't have to be an aggressive percentage, but I think it has become definitely an asset that is very much in demand, and you just cannot ignore the tremendous amount of demand that has developed in virtual assets. And it's pretty obvious as a consequence of what's going on economically to the world, basically, and particularly to the US dollar. Let's switch back here to the gold market and take a look at primary assets that we're trading here. Gold is trading last at 1808, up 790. Once again, reflecting the sentiment, basically, that the real reason why we're moving up in precious metals, why we're moving up in digital currencies, it's not because of inflation. It's not because we're running now, inflation. That's already old news. And maybe, we're looking at the, let me just kind of rephrase that a minute. The cat is out of the bag, basically, where, we're dealing with the inflation factor. And depending upon the bottleneck squeeze, so to speak, that's taking place in the supply chain, once the supply chain is once again replenished, then obviously it's going to take some of the pressure off. It should take some of the pressure off in terms of prices, make this a temporary short squeeze supply situation that caused this spike, you might say, in prices. I think once again, I want to focus on the real reason behind why I'm doing this, why I'm committing myself to this. I got my traders, my subscribers, because the real reason and the real problem is not the inflation factor, it's the weakness of the dollar. We're watching the silent destruction of the US dollar by the amount of stimulus that's being uh, distributed to the market. And it just doesn't seem to um, be ending anytime soon. Um, and this is being reflected in these assets, these digital assets like GDLC, and obviously um, being reflected here in precious metals in a very suppressed manner. Prices in precious metals have been, I believe, skewed away from its mean. And so, therefore, I believe that what's about to happen, and as it does always in the markets, is that the prices will adjust to its mean. Testing 1, 2. Testing 1, 2. The prices, excuse me for that. We had a little bit of internet problems here. Uh, as I was saying, the prices will adjust to its mean, and I think the metals are in the process of adjusting to the mean. Um, and we don't know yet that what that mean is, but certainly if you relate gold, silver to each other's relationship, uh, you're going to see that there's some anomalies that have been created that are offering just tremendous opportunities. And I think gold, once again, is undervalued, um, and it will go when you least expect it. And if you're not there, you're going to chase it, you're going to miss it. Um, so you want to be patient with the metals. And if you're building a core position, I think patience is the key word in precious metals. And as I said, look into adding these virtual assets as well in the form of an intelligent way, I believe, of doing it that takes away a lot of the questions that I have as an investor myself. And look into GDLC. 2630. It's a beautiful chart and highly volatile. We went up 1,000%, came down 500%, and now we're still up, 400, 500% from the lows that were made. And I believe this is just the beginning of this fund. And I think 5 years from now, who knows where this fund could be, depending upon obviously what happens here into the digital asset markets that I believe are just exploding and they're not going away. They are not going to go away. Um, I think the regulation talk is simply a way of the government trying to find a way to monetize out of the situations themselves. and they want to regulate, pay me a fee, and so, but it's very difficult to, I believe, control because of the blockchain foundation that it has in all this applications, and it provides again that independent way of investing without the middleman, which is the central bankers or even the government in that sense. So it certainly in times like this where we're moving into a virtual economy, um, go into space and looking to go to Mars, and certainly the good old dollar bill as a fiat currency is not going to work in that system. And so if you really take a look at pretty much what's going on between the lockdowns, and basically breaking the back of the old system, the physical system, which essentially means breaking the back of the US dollar. And it's in terms of its, domination as the US dollar world's reserve currency. It's the silent, you might say, the silent killer to the US dollar is this tremendous amount of money that's being printed that is essentially eroding the currency to inevitably down to its zero factor. It's a fiat currency, and all fiat currencies have gone to zero, particularly when they can't pay their own debt. So we're in the middle of a major transformation economically, and it's created tremendous opportunities if you are aware of what's going on, and you can see the transformation of this economy. You might say it really is an amazing opportunity. Um, so this is a way that I am certainly, um, joining the crowd, so to speak. So take a look at the markets here. We have some strong bids on gold, silver, everything that was down yesterday turned around. Copper is up 10 cents, 436 bid. GBTC, which is another asset that we track in the virtual asset world, is up 39, sharply higher. So what we have here, as you can see, the green, and primarily these are assets that are related to precious metals. Gold mining shares are substantially higher. Digital assets. So our portfolio looks pretty good this morning in terms of gaining equity. And we continue to suggest to hold alongside of metals here. Let's take a look at the dollar index here for a minute. Yeah, you can see the market in dollar, it's come down to 92, and we seem to be entering into this buy level here of 92.15 to 91.92. I think we're looking at some kind of support building at these levels in the US dollar, so we want to see how the market reacts when it comes down to these levels, which seems to be the case. So everything seems to be supporting a rally in the gold market to the levels that we're looking at, which is reaching up to the 1834 level. Right now, for day traders, there is no day trading signal in gold based upon the VCPMI indicator. It's it's around trading around the average price. It has activated a bullish price momentum with a daily target of 1317 to 1831. And I talk about the 1834 target because it matches the weekly targets, the weekly levels, 1824. 1824, 1831. So it's right into that pocket of distribution of supply that indicates that up here into these levels, there is a high probability to expect some supply. So, but in the meantime, we're getting a kind of a mixed signal here as the market is activating a bullish pattern above the 1806 level. When the market closes above 1806, the pattern basically activates the level above, which is the 1824. Even though it's an area of distribution of supply, you're entering a high probability area. Basically, you have another 10% probability of a rally from here, which is realistically possible. The daily average price is 1805, and that has activated a bullish price momentum with a target of 1817 to 1831. And this is basically how I identify the artificial intelligence and the signals for day trading, for swing trading, and for position trading. So daily, there is no signals. And we're entering the weekly target completed 1806. Now, if we close below 1806, 1805, then you're going to activate a short trigger as well as a bearish price momentum. So, as you can see here, the signals did unfold, not quite down to the target and reverted right back up into that average price or into that level. And that's pretty much where we are chopping around until one way or another, the momentum and the volume of, more buyers against sellers or buyers that would take the offers up here all the way up that are willing to pay all the way up to 1817, ideally 1824. So let's continue to watch the market here. As I said, it's in a average price, and when the market is in the average price, it basically recommends to do nothing. Let's take a look at silver on the shorter term basis. The silver is a little more bullish here. It's activated a buy trigger from 2601 at about 6:15 a.m. this morning. And the target is 2629, where we identify the harmonic relationship in silver. If we close above 2628, 2629, it will activate a very strong daily and a weekly bullish price momentum, and the targets of 2649 to 2676 all the way up to 27 are activated. Thank you once again, ladies and gentlemen, for the opportunity to share this data with you. And please subscribe so that we can continue to provide you with this just incredible artificial intelligence. And until next time, I'll see you, and take care of yourself in the meantime. Be well. Good trading. Take care.